My name is Millie Carter. I'm 34 years old, and for most of my adult life, I've worked in places where the most valuable skill isn't speaking loudly, it's noticing what everyone else misses. I live in Columbus, Ohio, and I work in accounting. Not the glamorous side of finance, the quiet side. The side with spreadsheets that stretch past midnight, reconciliation reports no one reads unless something goes wrong, and numbers that only become interesting when they stop behaving the way they're supposed to. People tend to form quick opinions about me. I'm soft spoken. I dress simply. I rarely interrupt anyone in meetings. If you walked past my desk, you'd probably see me typing quietly, headphones on, a coffee going cold beside a stack of reports. Because of that, most people assume a few things. They assume I'm cautious, they assume I'm agreeable, and sometimes they assume I won't push back. To be fair, I understand why. For years, I've been the kind of employee managers describe as reliable, the person who stays late without complaining, the person who fixes mistakes quietly instead of announcing them, the person who keeps systems running smoothly enough that no one ever has to think about them. Invisible competence has a strange side effect. When everything works, no one notices the person holding it together. But this story isn't about resentment, and it isn't about revenge. It's about a moment that started small, so small that at first it sounded like a routine request. My manager asked me to hide a $75,000 accounting error. He said it would confuse upper management if it showed up in the report. At the time, the way he said it almost sounded practical, temporary, harmless. Just move the number, adjust the ledger, clean it up next quarter. Except numbers don't disappear just because someone asks politely. And accounting has a quiet rule that most people outside finance don't fully understand. Every adjustment leaves a trail. At first, I thought the situation would resolve itself. Errors happen, corrections happen, companies move on. But when the finance department started asking questions, something shifted. What began as a small request slowly turned into a situation that no one seemed fully prepared to explain, especially not the person who asked me to make the number vanish. The strange thing is, when moments like that unfold, they don't feel dramatic while they're happening. There are no shouting matches, no sudden confrontations, just emails, meetings, quiet decisions, and sometimes silence. Looking back now, the most important choice I made during that entire situation wasn't something loud or heroic. It was something much simpler. I decided to pay attention. And once you start paying attention in a system built on numbers, you begin to see patterns that other people hope no one will notice. So, before we go further, I'm curious about something. Have you ever been in a situation where someone assumed you'd stay quiet, simply because you usually do? Before everything happened, most people at the company knew me in a very specific way. Not by name exactly, more like by function. If a reconciliation report didn't balance, someone would say, "Send it to Millie." If the quarterly numbers looked strange, someone would ask, "Did Millie already check this?" And if a deadline was approaching, and the finance team needed quiet reassurance that nothing catastrophic was hiding inside the spreadsheets, my name usually came up again. But rarely in the meeting itself. More often, it happened afterward, in hallways or forwarded emails. I was the person behind the numbers, not the person explaining them. That was usually Derek Lawson, my manager. Derek had a way of speaking that made complex financial details sound effortless. He was confident in meetings, quick with explanations, and comfortable with executives in a way I'd never really tried to be. When he presented reports upstairs, the spreadsheets I prepared would appear on the screen, but Derek's voice carried the story, and I didn't mind that, at least not at first. Some people enjoy being in front of the room. I enjoyed understanding the system. Accounting, when you spend enough years inside it, starts to feel less like math and more like ecology. Every number belongs somewhere. Every transaction moves through a path. If something shifts unexpectedly, the ripple shows up somewhere else. That kind of pattern recognition suited me better than meetings ever did. My desk sat near the back corner of the finance department, close enough to the accounting printers that I could hear the steady rhythm of reports printing all day. I kept things simple: 2 monitors, a calculator older than the company itself, and my blue notebook. The notebook wasn't an official work tool, it was just a habit I'd developed over time. Whenever something in the books felt slightly unusual, not wrong, just unusual, I'd write a small note, a date, a transaction ID, a question mark beside an entry. Most of the time, those notes never became anything important, though, but occasionally they helped me remember where a number had come from months later. Derek used to joke about it. One afternoon, he stopped by my desk while I was writing on it. "You still doing detective work in that thing?" he said, smiling. "Just keeping track of things," I told him. He laughed lightly. "Well, as long as it keeps the reports clean." That was usually how people described my work. Clean. Reliable. Quiet. No one ever used words like strategic or critical. But I didn't feel invisible in a negative way. At least not then. The company ran most of the time smoothly. And when numbers behave, accountants fade into the background. That's normal. If you're doing the job well, nothing dramatic happens. Which is why the moment Derek stopped by my desk one Tuesday afternoon didn't feel like the beginning of anything serious. He stood beside my chair, holding a printed reconciliation sheet. His tone was casual, almost friendly. "Hey, Millie," he said. "Quick thing. There's a small discrepancy in the freight adjustment ledger." I turned toward my monitor. "How small?" He tapped the page with his finger. 75,000. For a moment, I thought he was joking, because in our department, $75,000 wasn't a rounding error. It was a story. But Derek didn't look worried. He just leaned casually against the side of my desk. "We'll sort it out later," he said. "For now, just move the adjustment forward so it doesn't confuse upper management." The way he said it sounded simple, practical, temporary. But accounting has a quiet rule most people don't think about. Numbers can be delayed. They can be reclassified. But they never actually disappear. At the time, though, I simply nodded and looked back at the screen. Because sometimes the first step in understanding a situation is not reacting too quickly. And in that moment, Derek seemed completely certain that I wouldn't. When you work in accounting long enough, you develop a habit of separating numbers from tone. The numbers tell you what actually happened. Tone tells you how seriously other people want to treat it. When Derek mentioned the $75,000 discrepancy, his tone suggested it was a temporary inconvenience, something administrative, something that would resolve itself once the right documents showed up. But the number itself said something different. $75,000 doesn't appear in a freight adjustment ledger by accident. Not in a company our size. After Derek walked away from my desk, I opened the ledger entry he had printed. The discrepancy sat there quietly between two otherwise ordinary transactions. No alarms, no red flags in the system. Just a number that didn't reconcile. I traced the entry backward through the system. Invoice references, shipment adjustments, vendor corrections. The usual path a freight cost would take before settling into the final ledger. Everything looked normal until it didn't. One of the adjustments had been entered manually 2 weeks earlier. That wasn't unusual by itself. Manual corrections happen when shipment estimates are reconciled with final carrier invoices. But the documentation attached to this one was thin. Just a short note. Temporary freight variance, pending review, no supporting invoice, no carrier statement, no internal memo explaining the variance. I leaned back slightly in my chair and wrote 3 things in my blue notebook. May 12th, freight ledger variance, $75,000. Source unclear. Then I circled the last line once. That was usually the point where I'd send a quick message to Derek asking if there was additional documentation. But he had already answered the question before I asked it. Move the adjustment forward so it doesn't confuse upper management. In accounting language, that meant shifting the discrepancy into a future reporting period. Technically possible, but also technically noticeable, because adjustments don't disappear when they move forward. They simply change where the story begins. Still, I didn't challenge the request. That's the part people sometimes misunderstand when they hear stories like this later. They imagine a dramatic moment where someone stands up and says, "No, that's wrong. Real workplaces rarely work like that." Instead, people weigh small decisions quietly. Is this unusual or just inconvenient? Is this temporary or something that might matter later? Most of the time, it's safer to assume the situation will resolve itself. So I adjusted the ledger the way Derek asked. I reclassified the discrepancy into the next reporting cycle so it wouldn't appear in the quarterly summary. The spreadsheet is balanced again, technically. But something about the adjustment stayed with me the rest of the afternoon. Not because of the number itself, but because of how casually Derek had treated it. By the end of the day, the office had settled into its usual rhythm. Printers humming, People are finishing expense reports. The finance team is discussing next quarter's projections. No one else seemed aware that a number had quietly shifted out of view. Before shutting down my computer, I opened the ledger one more time. The discrepancy was gone from the quarter's totals, hidden exactly the way Derek wanted. I stared at the screen for a moment, then added one more line to my notebook, moved to Q3 adjustment column, per Derek's request. Not because I thought something terrible had happened, but because experience had taught me something simple. Small details that feel slightly uncomfortable today sometimes become very important later. And the strange thing was, the uncomfortable part wasn't the number, it was the feeling that Derek had assumed something about me without ever saying it out loud. He assumed I wouldn't ask questions, not because I agreed, but because I was quiet. For the next few weeks, nothing dramatic happened. That's often how situations like this unfold. The moment that seems important later blends quietly into normal routines while it's happening. Quarter-end reporting moved forward. Invoices were processed, budget forecasts were updated, and the $75,000 adjustment stayed exactly where Derek had asked me to move it. Technically, it wasn't wrong anymore. It was simply waiting. In accounting, postponing a discrepancy creates a kind of quiet pressure. If the explanation doesn't appear before the next cycle closes, someone eventually has to decide what the number actually represents: error, correction, or something else. But Derek didn't bring it up again. About 2 weeks later, I was finalizing a vendor reconciliation report when he stopped by my desk again. Same relaxed posture, same casual tone. "Hey, Millie," he said. "Did that freight adjustment stay out of the quarterly summary?" "Yes," I said. "It's sitting in the Q3 column now." "Perfect." He nodded once and started to walk away. Then he paused and added something that sounded almost like a compliment. "That's why you're so helpful on this team." Helpful. It was a harmless word on the surface, but the way he said it lingered with me for the rest of the morning. Because in finance departments, people are usually described with more specific language: analytical, accurate, detail-oriented. Helpful usually meant something slightly different. It meant cooperative. It meant someone who didn't complicate things. And once I noticed it, I started hearing the same tone in other small moments. Nothing dramatic, nothing anyone else would call disrespect. Just assumptions. During one meeting about shipping costs, Derek referenced one of my reports while explaining a variance to the operations director. He said, "Our team reviewed the numbers and will smooth that out next cycle." I recognized the report immediately. I had written the explanation attached to it, but Derek never mentioned my name. Again, that wasn't unusual. Managers often present work created by their team. Still, something about the pattern felt familiar. Later that afternoon, another accountant stopped by my desk with a small correction request. "Derek said you're good at cleaning these things up," she said, handing me a spreadsheet. I glanced at the document. Another adjustment. Smaller this time, about $6,000. Still missing supporting documentation. "Where did this one come from?" I asked. She shrugged. "Not sure. Derek just said you'd know what to do with it." I looked at the entry for a moment. Then I fixed the formatting error and sent the corrected version back. It took less than 10 minutes, and technically, it was part of my job. But something about the phrase, "you'll know what to do with it," stayed with me, because what it really meant was something slightly different. It meant someone believed I would quietly solve problems without asking too many questions about where those problems came from. Again, none of this felt serious enough to challenge. That's another thing people misunderstand about situations like this. Disrespect rarely arrives as a loud event. It builds slowly, one assumption at a time, one casual request at a time, one small moment where your role becomes clearer. Not because anyone explained it, but because everyone behaves as if the explanation already exists. By the end of that month, I realized something about how Derek saw me. To him, I wasn't just the person who balanced the books. I was the person who could make irregularities stop being inconvenient. The person who could move numbers quietly enough that the story still looked clean from the outside. Reliable, helpful, invisible. And the uncomfortable truth was, for a long time I had allowed that role to exist. Not because I lacked confidence, but because silence had always felt easier than friction. Still, the note in my blue notebook kept reminding me of something. The $75,000 discrepancy was still there, just waiting for the next quarter. And eventually, every number has to return to the surface. By the time June ended, the rhythm of the department had settled back into something predictable. Deadlines, monthly closings, routine reconciliations. On the surface, everything looked exactly the way it always had. But once you notice a pattern in a workplace, it becomes difficult to unsee it. And the pattern around me had become clearer. I wasn't just the person who balanced reports, I was the person people sent problems to when they didn't want those problems to grow larger. It happened in small ways. A junior analyst would forward me a spreadsheet with a short message. Could you take a look at this before Derek sees it? Or someone from operations would call and say, I think this shipment adjustment might be off, but Derek said you're good at smoothing things out. That phrase again, smoothing things out, not fixing, not investigating, just smoothing. At first, I treated these requests the same way I always had, quietly reviewing the numbers, correcting what needed correction, documenting anything that looked unusual. But internally, something had shifted. Before, I thought of my work as maintaining order. Now I realize that other people sometimes saw it as absorbing friction. The difference between those two ideas is subtle. Maintaining order means protecting the accuracy of a system. Absorbing friction means preventing the system from creating uncomfortable conversations. One afternoon in early July, Derek called a short meeting in the small conference room next to the accounting printers. There were 5 of us from finance sitting around the table while he walked through upcoming reporting deadlines. Most of it was routine, budget review schedules, vendor audit preparation. Then he paused on one slide showing freight cost projections. Operations have been a little messy with adjustments lately, he said, but our team has been handling it well. He glanced toward me briefly when he said that, not in a way that drew attention, just a quick acknowledgement. Then he continued speaking to the room. As long as we keep the numbers clean before they move upstairs, everything stays manageable. A few people nodded. No one asked questions. The meeting moved on, but something about that sentence stayed with me. Keep the numbers clean before they move upstairs. It wasn't technically wrong. Every finance department prepares reports before executives see them. That's part of the process. But the phrasing revealed something important about Derek's expectations. He wasn't describing accuracy, he was describing a presentation. And in that system, my role had quietly been defined. Not the person who raised concerns, not the person who challenged inconsistencies, the person who ensured those inconsistencies didn't interrupt the flow of information, reliable, quiet, useful, invisible. Later that afternoon, I opened my blue notebook again and reread the entry from May. Freight ledger variance, $75,000, still sitting in the Q3 column, still unexplained, still waiting. I flipped to a new page and added another short line beneath it. Role expectation confirmed, problem absorber. The words looked slightly strange written down like that, almost clinical. But writing things down has a way of clarifying thoughts you might otherwise ignore. For the first time, I realized something simple. Derek wasn't asking me to hide the number because he thought it would disappear. He was asking because he believed I would treat it the same way I treated everything else. Quietly, cooperatively, without creating friction. And the truth is, until that moment, he had been right. If you had walked through the finance department that Tuesday morning, nothing would have looked unusual. The same quiet hum of printers, the same low conversations between cubicles. Someone is heating oatmeal in the break room microwave. Workplaces rarely announce the moment when something begins to change. It usually happens in a pause. That morning, I arrived a little earlier than usual. The office lights above the accounting section were still dimmed, and the only other person there was Greg from payroll, already halfway through his second coffee. I sat down at my desk and opened the reconciliation dashboard. Q3 was approaching faster than most people realized, which meant the adjustments I had made 2 months earlier would soon come back into view. The $75,000 entry appeared exactly where I had left it, quiet, unresolved, waiting for an explanation. For the first time since Derek asked me to move it, I looked at the number without immediately trying to solve it. Instead, I asked a slightly different question. What happens if no one ever explains this? The answer wasn't dramatic. Accounting systems don't collapse because of a single unresolved adjustment. What happens instead is something slower. Someone assigns the number to a category. Loss, variance, operational correction. The story becomes whatever the person in charge decides it should be. And in our department, that person wasn't me. It was Derek. I stared at the ledger entry for a few minutes longer than usual, then opened the transaction history again. Same thin documentation, same vague note. Temporary freight variance, pending review, no update, no follow-up. Nothing indicates that anyone has actually looked into it since May. That was the moment something subtle shifted in my thinking. For weeks, I had treated the discrepancy like a puzzle, waiting for someone else to explain it. But puzzles don't solve themselves, and if Derek had intended to resolve it, he'd had plenty of time. I leaned back slightly in my chair and looked around the office. Greg had left for a meeting. The printers were still warming up. For the first time that morning, the department was completely quiet. In that quiet, another thought surfaced, one that surprised me a little. Not anger, not frustration, just clarity. If the number eventually returned to the reports without an explanation, someone would need to understand where it came from. And if I didn't understand it myself, I would eventually be asked to explain it anyway. That's the strange reality of accounting departments. The person closest to the numbers becomes the person responsible for answering questions about them, even if they weren't the ones who created the situation. I closed the ledger window and opened a different file instead. Shipment adjustments for the previous quarter, freight invoices, carrier reconciliations, manual correction entries, the same data sets I had reviewed 100 times before. But this time, I wasn't just checking whether the numbers balanced. I was looking for context, for patterns, for anything that might explain why a $75,000 discrepancy had appeared without documentation. About 20 minutes later, I realized something else, not about the number, about my own behavior. For months, maybe years, I had approached situations like this with a certain assumption. If something looked unusual, I quietly corrected it and moved on. But this situation wasn't asking to be corrected. It was asking to be understood. And that realization created a small but important shift in my mindset. Silence didn't have to mean cooperation. Sometimes silence simply meant observing longer, documenting more carefully, letting the situation reveal itself before deciding what to do about it. I opened my blue notebook again and added a new entry beneath the earlier notes. July 7th, discrepancy still unresolved. Then, after a short pause, I wrote one more sentence. Begin full trace if the explanation doesn't appear before Q3 close. It wasn't a confrontation, it wasn't even a decision, just a quiet adjustment in how I intended to approach the situation. And the strange thing was, once that shift happened, the office around me looked exactly the same. Same desks, same spreadsheets. The same manager was walking past my cubicle 20 minutes later with his morning coffee. Derek nodded casually as he passed. "Morning, Millie." "Morning," I said. Nothing in that moment suggested the story was beginning to change. But internally, something was already there. After that morning in July, nothing about my behavior looked different from the outside. I still arrived early. I still balanced reports before deadlines. I still answered questions in the same calm, measured tone I always used. But internally, something subtle had changed. Before, my silence had been automatic. Now it was intentional. There's a difference between the two that most people never notice. Automatic silence comes from habit. You stay quiet because it feels easier than creating friction. Intentional silence is different. It means you've decided that observation is more useful than reaction. Over the next few weeks, I began paying closer attention to the small movements inside the accounting system. Not just the numbers themselves, but the behavior around them. Who entered adjustments? Who approved them? Which entries came with documentation? And which ones arrived with vague explanations? It turns out that when you slow down enough, patterns begin to appear. For example, I noticed something interesting about the freight adjustment ledger. Most entries followed a predictable structure: carrier invoice number, shipment reference, supporting document attached. But a handful of adjustments looked thinner: short notes, minimal attachments. Nothing overtly wrong, just less explanation than usual. I didn't confront anyone about it. Instead, I started creating a second layer of documentation, not inside the company's accounting software. That system already had its own audit trails. I simply expanded the notes in my blue notebook. Dates, transaction IDs, small observations, things like manual adjustment entered without a carrier invoice. Documentation was added 3 days after posting. Variance categorized as temporary, review pending. None of this felt dramatic. It was simply the kind of tracking accountants sometimes do when they're trying to understand how a process behaves over time. But there was another reason I didn't mention any of it to Derek. Because the moment you ask a question in a workplace, the behavior around that question changes. People become cautious. Documentation appears suddenly where it didn't before. Patterns disappear. Silence, on the other hand, lets systems behave naturally. And the more naturally a system behaves, the easier it becomes to understand it. About 3 weeks after that July morning, Derek stopped by my desk again. He was holding a tablet this time instead of a printout. "Millie, quick check," he said. "Operations thinks freight costs might be drifting again. Have you noticed anything unusual?" I glanced at the ledger open on my screen. There were a few minor adjustments, nothing significant. "Nothing outside the normal range," I said, which was technically true. The numbers themselves weren't unusual. The context behind some of them was still unclear. But Derek didn't ask for that level of detail. He nodded, satisfied. "Good. Just wanted to make sure nothing weird was coming up before the next report." Before walking away, he added with a half smile, "You're good at keeping things steady." Steady. It was another version of the same assumption I had heard for months. Reliable, helpful, steady. Words that meant the same thing in practice. Someone who wouldn't make the system uncomfortable. I watched him walk back toward his office, then turned my attention back to the ledger. For a moment, I considered mentioning the $75,000 discrepancy again, just to see how he would respond, but I decided not to, because by then, I had realized something important. The silence between us wasn't an oversight. It was a shared understanding. Derek believed the issue was already handled, and I had decided to let that belief remain exactly where it was, for now. Instead of speaking, I opened my notebook again and wrote a short sentence beneath the previous entries. "Silence maintained. Observation continues." Then I closed the notebook and returned to my work, because sometimes the most powerful position in a complicated situation is simply the person who knows more than they say. By August, the office had entered that familiar late summer rhythm. Deadlines still existed, of course, but the intensity of the second quarter close had faded, and people were beginning to think about vacation days, upcoming audits, and the slow preparation for the year's final reporting cycle. From the outside, nothing about my routine had changed. I still worked quietly at the same desk in the corner of the finance department. I still produced the same clean reports Derek presented during management meetings, and I still rarely spoke unless someone asked me a direct question. But behind that routine, something else had been unfolding. Something so ordinary that no one around me would have recognized it as preparation. Because preparation, when it happens quietly, rarely looks dramatic. It looks like an organization. Over the weeks following that July morning, I had begun reviewing past freight adjustments more systematically. Not aggressively, not in a way that would trigger attention, just gradually. Whenever I finished my assigned reconciliation work for the day, I spent another 20 or 30 minutes reviewing older entries, shipment records, vendor invoices, manual correction logs. Most of the time, the numbers told exactly the story they were supposed to tell. A shipment estimate was entered early, a final carrier invoice is arriving later, a small adjustment correcting the difference, but occasionally I found entries that looked similar to the one Derek had asked me to move. Not identical, just similar. Small adjustments posted manually, brief notes explaining them, documentation that appeared later or sometimes never appeared at all. Again, none of those entries was individually alarming. Accounting systems are full of small irregularities. What interested me wasn't the individual entries, it was the pattern. So I began organizing my notebook differently. Instead of listing isolated observations, I created small categories. Freight adjustment, manual entry documentation delayed. Variance is categorized as temporary. Under each heading, I wrote the transaction IDs and dates. At first, the pages looked sparse. 2 entries here, 3 entries there, but by mid-August, the pattern had become easier to see. Certain types of adjustments seemed to originate from the same internal accounts, the same cost centers, sometimes even the same shipment routes. None of it proved anything by itself, but accounting isn't usually about proof in the dramatic sense. It's about traceability, understanding where numbers begin, how they move, and why they eventually settle where they do. And the more I traced those paths, the clearer something became. The $75,000 discrepancy wasn't completely unique. It was simply the largest example of a category of adjustments that had appeared quietly over the past year. That realization didn't make me angry. It made me curious, because large discrepancies rarely appear without smaller ones appearing first. They follow the same paths, just at a different scale. One afternoon near the end of August, I opened the company's archived freight reports from the previous fiscal year. Most accountants only review archived data when an audit requires it. But I had time that afternoon, and curiosity can be a powerful motivator. As I moved through the old reports, another small pattern appeared. Every few months, there was a freight variance categorized as temporary operational adjustment. The numbers were usually modest: $4,000, $9,500, once about $18,000. Nothing large enough to attract attention during quarterly reviews, but the language attached to them was familiar: temporary, pending review. The same phrasing is attached to the $75,000 entry. I leaned back in my chair and stared at the monitor for a moment. Then I opened my notebook again and wrote a simple observation across a new page: freight variance pattern, recurring annually. Below that, I listed the entries I had found: dates, amounts, ledger references. Still, I didn't draw conclusions. Accounting teaches you to resist conclusions until the evidence becomes unavoidable. For now, I was simply building a clearer picture of the system. And the interesting thing about systems is that they often reveal their structure slowly, not through dramatic discoveries, but through quiet accumulation, small pieces of information that eventually connect. Later that week, Derek passed by my desk again during the afternoon. "Everything looking normal?" he asked casually. I glanced at the reconciliation report open on my screen. The numbers balanced perfectly. "Everything looks fine," I said, which technically was true, because the ledger itself was behaving exactly the way the system expected it to behave. The difference was that now I understood something Derek and most of the department had probably never noticed. Numbers don't just record events, they also record habits. And once you see a habit inside a financial system, you can usually follow it wherever it leads. By early September, the freight adjustment ledger had stopped looking like a collection of unrelated entries. It had begun to look like a timeline, not a dramatic one, not the kind of investigators that might be built on a whiteboard in a movie. Just a quiet pattern stretching across several quarters. Small variances appear occasionally, manual adjustments to resolve them, brief explanations that rarely attracted attention. Most companies have patterns like that in their accounting system. Operational reality is rarely perfectly clean. But one afternoon, while reviewing the archived entries again, I noticed something I hadn't seen before. Not in the numbers themselves, in the approval trail. Every manual adjustment inside our system required a supervisor's confirmation. It wasn't a complicated process, just a digital approval that allowed the ledger entry to finalize. Normally, those approvals rotated between managers, depending on who was responsible for the account. Operations managers approved operational costs. Finance managers approved reconciliation corrections, routine, predictable. Except for one small detail. Many of the freight variances I had been documenting shared the same approving name: Derek Lawson. That alone wasn't unusual. Derek was responsible for freight reconciliation oversight. His name appearing on approvals made sense, but what caught my attention was something slightly different: the timing. Several of the adjustments had been approved within minutes of being entered, too quickly for a detailed review, which meant one of two things. Either Derek already knew exactly what the adjustment represented, or he trusted the entry enough not to question it. I didn't assume the worst. Accounting teaches you to avoid assumptions, but the pattern added another layer to the picture I had been building. I opened the oldest freight variance I had documented from the previous year, an adjustment just under $10,000. The supporting note was nearly identical to the one attached to the $75,000 entry: temporary freight variance, pending review. No follow-up note had ever been added, which meant the temporary classification had quietly become permanent. It had simply been absorbed into the system. I stared at the entry for a moment and felt something settle into place in my mind. Not a conclusion, more like clarity. The $75,000 discrepancy wasn't an isolated mistake someone hoped would disappear. It was part of a process, a quiet financial habit the department had been using for some time. Small operational variances appeared, temporary adjustments absorbed them, and eventually the numbers blended into the larger financial picture. Most of the time, the amounts were small enough that no one asked many questions. But this time, the number had grown too large to blend quietly, which explained Derek's original request. Move it forward so it doesn't confuse upper management. He hadn't been panicking. He had simply been continuing a pattern that had worked before. For a long moment, I didn't move. The office around me buzzed with the usual late afternoon activity, phones ringing, printers finishing the last reports of the day. No one seemed aware that anything significant had happened. And in a sense, nothing had. I hadn't uncovered fraud. I hadn't discovered anything illegal. What I had found was something more subtle, a financial habit that relied on one quiet assumption, that the person closest to the numbers would treat these adjustments as routine, helpful, manageable, invisible. I opened my notebook again and wrote a new heading across a fresh page: Freight Variance Process, Structural Pattern Identified. Underneath it, I listed the largest entries I had documented, ending with the one that started everything. $75,000, May adjustment, moved to Q3 per Derek's request. Then I paused. For the first time since the situation began, I realized something important. I now understand the system better than anyone else in the department. Not because I was smarter, but because I had spent weeks quietly observing how the pieces fit together. And once you understand a system that clearly, something interesting happens. You gain options. I closed the notebook slowly and placed it beside my keyboard. Not with excitement, not with anxiety, just with a calm awareness that the situation had reached a new stage, because clarity doesn't tell you what to do. It simply removes the illusion that you don't have a choice. Once you understand how a system works, the next question is rarely what happened. It becomes what you're going to do with that knowledge. By the time September ended, the picture was clear enough that I could no longer pretend the $75,000 adjustment was simply waiting for clarification. It had already been treated the same way other variances had been treated before it: moved, categorized, quietly absorbed. The only difference was the size. And that difference meant something important. Large numbers attract attention eventually. Even in companies where people prefer not to ask complicated questions, financial reports still pass through several levels of review. At some point, someone outside our department would notice the variance when it reappeared in the quarterly reports. When that happened, the explanation would need to come from somewhere, most likely from Derek. But the supporting documentation would still sit inside the reconciliation files I maintained. That realization forced me to consider something I hadn't wanted to think about before. There were several ways this situation could unfold. I could simply leave things as they were and let the next reporting cycle handle it. I could raise the issue internally before the reports moved upward. Or I could do something quieter, something accountants sometimes do when they sense that a situation might become complicated later. I could make sure the documentation trail was impossible to misunderstand. None of those options involved confrontation. None of them required dramatic action. But one of them was irreversible. Because once a financial trail is fully documented and preserved in the right places, the story behind the numbers becomes very difficult to reshape later. That afternoon, I sat at my desk for several minutes without opening any spreadsheets. The office noise moved around me like it always did. Phones, printers, quiet conversations. Nothing about the environment suggested that a decision was being made. But internally, I knew something had shifted again. Not because I felt angry, not because I wanted anyone to get in trouble, but because I had spent enough time with the numbers to understand one simple rule about financial systems. If a story eventually needs to be told, it's better when the records tell it clearly. So I opened my notebook one more time and wrote a short sentence at the bottom of the page. Decision made, full documentation begins. Then I turned back to the ledger and started organizing the information in a way that would make sense to anyone who might eventually need to see it. Once the decision was made, the next step wasn't dramatic. In fact, from the outside, nothing about my routine looked different. I still completed the same reports, still responded to emails, still sat quietly at the same desk in the corner of the finance department. But the way I organized my work began to change. Accountants already keep records as part of the job. Every entry inside the system leaves a trace: timestamps, approval logs, attached documents. What I began doing was simply making those traces easier to follow. When I reviewed freight adjustments, I made sure every supporting file was correctly linked to its transaction: carrier invoices, shipment confirmations, internal notes. Anything connected to an entry was organized clearly in the documentation folders the finance department shared. Nothing new, just a clearer structure. I also added short reconciliation notes where the system allowed it. Not commentary, just neutral descriptions. Manual adjustment entered May 12. Variance moved to the Q3 column per the reporting instruction. Supporting documentation pending. Those notes weren't accusations. They were simply context. Anyone reviewing the ledger later would be able to see the sequence of events without guessing how the numbers moved from one quarter to the next. That kind of documentation is considered good accounting practice anyway. But because it happened gradually, no one paid much attention to it. One afternoon, Derek stopped by my desk while I was finalizing a freight report. "Everything lining up for Q3?" he asked. "Yes," I said, which was true. The reports were clean, the numbers balanced, and the documentation behind them had never been clearer. Derek nodded, satisfied, and continued toward his office. He didn't open the reconciliation notes. He didn't review the transaction trail. From his perspective, the system was behaving exactly the way it always had: stable, quiet, under control. And that was the interesting part, because the work I was doing wasn't about changing the numbers. It was about making sure the story behind them remained visible. Accounting systems are like maps. If the landmarks are labeled clearly, anyone can follow the path. And by the time October approached, the path behind the $75,000 discrepancy was now mapped in a way that hadn't existed before. Calmly, methodically, without anyone noticing the difference. The first sign that something had changed didn't come from Derek. It came from the finance department upstairs. By mid-October, the Q3 reporting cycle had begun. That meant the freight adjustment I had moved months earlier was now returning to the surface of the reports. Numbers have a rhythm in corporate system. When a variance appears in one quarter and reappears in the next, it eventually reaches someone whose job is to ask a simple question: why is this still here? That question arrived in the form of an email late on a Wednesday morning. Not dramatic, not urgent, just a short message from someone in corporate finance. Subject line: freight adjustment clarification. Inside the email was a single sentence: could someone provide additional documentation for the $75,000 variance showing in the Q3 freight reconciliation? I read the message once, then again. There was no accusation in it, just curiosity, which is exactly how financial reviews are supposed to begin. A few minutes later, Derek stepped out of his office holding his phone. "Millie," he said casually, "did you see the finance email about freight?" "Yes. They're just asking about that old adjustment," he said. "Nothing serious." His tone was relaxed, almost dismissive. "Can you send them whatever documentation we have so they stop digging into it?" I nodded. Of course. From his perspective, the situation was simple. The same kind of variance that had appeared before. The same quiet adjustment process. The same expectation was that the details would stay manageable once the right files were shared. And technically, the documentation now existed, more clearly than it ever had. That afternoon, I opened the freight reconciliation folder and gathered the files connected to the variance: shipment records, adjustment history, ledger notes. Everything was organized exactly the way I had been preparing it over the past month. Then I attached the documents to a reply email. No commentary, no explanation beyond a short, neutral sentence. Attached are the supporting records for the freight variance referenced in the Q3 reconciliation. I sent the email and returned to my work. At first, nothing happened. The office continued its usual rhythm. Reports moved through approval cycles. Meetings came and went. But a day later, another email arrived from corporate finance. This time, it contained two questions. The first was simple: can you confirm why this variance was reclassified between reporting periods? The second question was more interesting. Was this adjustment part of a broader operational correction or an isolated entry? I read the email quietly. Across the room, Derek was on a call with someone from operations, speaking in the confident tone he usually used during routine financial discussions. From where he sat, the system probably still looked steady, predictable, under control. But questions have a way of moving through organizations slowly. One department asks for clarification. Another department reviews the explanation. And suddenly, a number that once felt small begins appearing in more places. Later that afternoon, Derek walked over again. "They're asking a couple more questions," he said, glancing at his phone. "Nothing unusual." Then he added something that sounded almost reassuring. "These finance reviews always look bigger than they are." I nodded, and again he assumed the same thing he always had, that the person closest to the numbers would keep things simple, manageable, quiet. What he didn't seem to realize yet was that something fundamental had changed. The system itself hadn't become unstable. The numbers are still balanced, but the story behind them was now visible in a way it hadn't been before. And once that kind of visibility exists inside a financial report, questions tend to continue. Not because anyone is angry, but because the numbers finally give them a reason to ask. By the following week, the questions from corporate finance had become more specific, still calm, still professional, but more detailed. Another email arrived Monday morning requesting a short call with someone from our department to walk through the freight variance history. Not just the $75,000 adjustment, the earlier entries too. The smaller ones, the ones I had quietly traced over the past few months. When Derek saw the meeting invitation appear in his inbox, his reaction was subtle at first. He stood outside his office for a moment, scrolling through his phone, then walked over to my desk. "Finance wants to go over the freight adjustments from the past year," he said. His tone was still measured, but the casual confidence I had heard before was slightly thinner. "They probably just want context." I nodded. "That makes sense." He glanced at my monitor. "Do we have the documentation organized for those entries?" "Yes," I said. That answer was simple and accurate. The records were organized more clearly than they had ever been before. Every adjustment had its timeline. Every note showed when entries were moved between reporting periods. Nothing hidden, nothing interpreted. Just the sequence of events exactly as they had occurred. Derek seemed relieved. "Good," he said. "Then this should be straightforward." For a moment, I considered explaining something. Not about the numbers themselves, about the pattern they revealed when viewed together. But I didn't say anything, because by that point, explanations were no longer the important part. The records would speak clearly enough on their own. 2 days later, the meeting took place. It wasn't dramatic, just a video call with 3 people from corporate finance, Derek and me sitting quietly at the end of the conference table with my laptop open. They asked questions in the calm, procedural way auditors and finance reviewers usually do. When was the variance first identified? Why was it moved into the next reporting period? Were similar adjustments made in previous quarters? Derek answered most of the questions, confidently at first, then more carefully. Whenever someone referenced a specific entry, I shared the documentation folder showing the adjustment history, transaction timestamps, approval records, ledger notes, no opinions, just the path the numbers had taken through the system. At one point, one of the reviewers paused while looking at the timeline of freight variance. "I'm noticing several adjustments categorized as temporary over the past year," she said. "Were those eventually reconciled through operational corrections?" There was a short pause, not an uncomfortable one, just longer than the others. Derek leaned slightly forward. "They were operational variances that we expected to resolve over time," he said. The reviewer nodded slowly. "I see." She didn't challenge the explanation, but she continued scrolling through the records, and because the documentation was now structured clearly, the pattern was easy to follow. Smaller adjustments appear earlier in the year, then the larger one, then the reclassification between reporting periods. Nothing dramatic. Just a sequence of decisions that had gradually become visible. The meeting ended politely. No accusations, no raised voices. But as everyone began closing their laptops, something in the room had shifted. Not tension, something quieter. Recognition. Derek remained seated for a moment after the call ended, looking at the table, then on the screen. Finally, he turned slightly toward me. "They're digging into this more than I expected," he said. His voice was calm, but the certainty that had always accompanied it was gone. For months, the system had behaved exactly the way he assumed it would. Small adjustments, quiet resolutions, numbers are smoothing themselves into the reports. But now the structure behind those adjustments was visible. And once that kind of visibility exists in financial records, there's no simple way to return things to the way they looked before. Because documentation doesn't argue, it simply shows what happened. And by the time Derek realized that, The story had already become too clear to rewrite. The conversation happened 2 days after the meeting with corporate finance, not in a conference room, not during a formal review, just a quiet moment late in the afternoon when most of the department had already gone home. I was finishing a reconciliation report when Derek appeared beside my desk. He didn't sit down right away. For a moment, he just stood there, looking at the monitor where the freight ledger was still open. Then he pulled the empty chair from the neighboring desk and sat across from me. His voice was calm, but slower than usual. "Millie," he said, "the finance team asked for additional documentation on some of those earlier adjustments." "I saw the request," I replied. He nodded. For a few seconds, he looked at the screen again. Then he said something slightly different from anything he had said before. "They're reading a lot into those entries." It wasn't a complaint, more like a quiet observation. I didn't respond immediately. Instead, I turned the monitor slightly so he could see the reconciliation timeline more clearly. All the adjustments were there. The smaller variances from the previous year, the notes attached to them, the larger discrepancy that had started the whole situation. Each step is documented in simple, neutral language. Derek studied the entries for a moment. "I didn't realize the notes were that detailed," he said. "They're just standard reconciliation notes," I said, which was true. Nothing in the documentation accused anyone of anything. It simply showed when entries had been created, moved, or reclassified. Accounting systems are very good at recording that kind of history. Derek leaned back slightly in the chair. "For years, we've handled freight variances this way," he said. "Small adjustments until operations settle the numbers." "I understand," I said. He glanced toward me then, not defensively, just thoughtfully. "But now they're asking why the adjustments were categorized as temporary if they stayed in the system this long." I nodded once. "That's a reasonable question." There was another short pause. The office around us was quiet, just the faint sound of the building's ventilation and the occasional printer finishing its last report. Finally, Derek asked the question that had probably been forming in his mind since the finance meeting. "When you documented those entries, were you expecting them to review everything this closely?" I considered the question for a moment before answering. "No," I said. Then I added something that felt important to say clearly. I was expecting the records to explain the numbers if anyone asked. Derek looked at the screen again, then at the notebook beside my keyboard. For the first time since I had worked under him, he seemed to be seeing the system from the same perspective I had been looking at for months, not as a series of adjustments, but as a timeline. A story told through transactions. Eventually he stood up. "Well," he said quietly, "I suppose we'll answer whatever questions they send next." There was no frustration in his voice, just acceptance. Before leaving, he paused for a moment. "You've always been very thorough with the records." "Accuracy matters," I said. He nodded once. Then he walked back toward his office. No raised voices, no accusations, just the quiet understanding that once a system's history becomes visible, no one gets to decide how the story looks anymore. The weeks that followed weren't dramatic. There were no emergency meetings, no sudden announcements. Corporate finance continued reviewing the freight adjustments, asking for clarifications when needed, documenting their own conclusions the same way financial teams always do, slowly, methodically, through reports and follow-up questions. Inside our department, daily work continued almost exactly the same. Invoices arrived, reconciliations were completed, quarter-end schedules moved forward. From the outside, the office still looked steady, but something about how people interacted with me had changed in a subtle way. Not dramatically, just slightly more careful. Colleagues who used to drop spreadsheets on my desk with phrases like, "You'll know what to do with this," now ask more specific questions. "Do we have documentation for this adjustment? Should we attach the carrier invoice here?" Even Derek's tone shifted. Not unfriendly, just more deliberate. If a correction needed to be made in the system, he now asked a different kind of question. "Is there a note explaining this entry?" And each time my answer was simple. Yes, because that had become my habit. Not to challenge people, not to control the system, just to make sure the story behind the numbers remained clear. Over time, I realized something else had changed. Not in the department, in me. For years, I had thought of my quiet nature as something that made me easy to overlook. The person behind the reports, the one who made things run smoothly without drawing attention. But the events of those months showed me something different. Quiet observation isn't a weakness. It's perspective. When you listen more than you speak, you notice patterns earlier. When you document carefully, you understand systems more deeply than the people who simply move through them. And when the moment arrives where clarity matters, you're already prepared. One evening in early November, I stayed a little later than usual, finishing the final reconciliation review for the quarter. The office lights were dimmed again, just like that morning months earlier when the entire situation had first shifted in my mind. I closed the last spreadsheet and opened my blue notebook. The pages were filled now. Dates, transaction IDs, small observations that had slowly turned into a full understanding of how the system behaved. I flipped back to the page from May. Freight ledger variance assessed $75,000. It looked almost small now compared to everything that had unfolded afterward. Not because the number had changed, but because my perspective had. I wrote one final note beneath the earlier entries. Documentation complete. System understood. Then I closed the notebook and placed it in my bag. Because the most important thing I gained from that entire experience wasn't control over a situation. It was clear about who I was inside it. Not the invisible person smoothing problems away. Not the quiet employee people assumed would simply adjust the numbers and move on. I was the person who understood the system well enough to let the truth remain visible. And once you realize that about yourself, you stop worrying about whether people notice you. Accuracy has a way of speaking for itself. Looking back now, the most interesting part of the whole situation wasn't the $75,000 discrepancy. It was the assumption behind it. For a long time, people around me believed something simple about the way I worked. Because I was quiet, because I rarely challenged things directly, they assumed I would always smooth problems away quietly. But silence doesn't always mean agreement. Sometimes silence just means someone is paying attention. I didn't expose anyone. I didn't start an argument. I didn't try to win anything. All I did was make sure the records told the truth about how the numbers moved through the system. And once that truth was visible, the situation handled itself the way financial systems usually do, through questions, documentation, and careful review. No drama, just clarity. What I learned from that experience is something I carry with me in every job now. Being calm doesn't mean being passive, and being underestimated isn't always a disadvantage. Sometimes it simply gives you the space to see the whole picture before anyone else does. So, I'm curious about something. If you were in that situation, when someone asked you to quietly move a number that didn't fully make sense, would you have handled it the same way? Or would you have done something differently?
Video hữu ích, hãy ấn like và đăng ký kênh để ủng hộ mình nhé. Chúng ta sẽ gặp nhau ở những video tiếp theo. Bye bye.